day, traders, and welcome to the XM Live. This is copy trading, guys. Copy trading. Copy trading. This is my third session actually, and today I will explain, guys, how to choose actually copy trading service, and depending on your mentality and your style, you want to see actual results, because guys, some people are slow taking small risks, some people are faster taking more aggressive risks. I'm one of those faster guys who like to take bigger risk, and I will put myself today not in the role of the educator and professional trader, but I will put myself in a position of a guy who wants to invest in copy trading service by XM. So basically, I am today like an ordinary guy who knows about forex, but he wants to invest. Okay, so I'm not educator today. I'm not a professional trader today. I am a simple guy who has been trading for, let's say, a couple of years, and I want to invest into some of those copy trading services, right? So what should I choose? Before, guys, we start with the choice, we still need to check what does all of this means, guys. So if you watch, for example, the first guy, euro dollar 250, return is pretty okay, 87.93% risk with 71% drawdown. I, being a trader, guys, like to take bigger risk. My drawdowns, myself, how I trade, and I can make 400-500% of profits literally in 2 months, 3 months. For example, just to show you, this is how I do it. But look, my drawdown is 52%. So I am okay with a little bit higher drawdown, as long as the account can double itself. Okay, now listen, why is that important? If you want to double your account, it means that your return should be around 100%, right? It means that you doubled your account, or double your deposit, double your deposit. Meaning that if you invested 1,000, when you make 1,000, this is 100% gain, right? So now, drawdown of 70% in this example is a little bit maybe higher than I would do it myself, or if I would want it myself, right? But still, it's in the range of acceptable drawdowns. Why, guys? Look, for me, this is pretty simple how I would do it. Let's say that this investment here into this euro dollar copy trading service gives me 100% yield, ROI, right? So 100% return on investment. So what do I do then, guys? I withdraw my profit and I leave my deposit. So if I double the account, I will withdraw the same amount that I made a deposit. So let's say I invested 1,000 euros, I will withdraw 1,000 euros. And then, guys, I'm completely relaxed. Why? Because I don't think about my deposit. Because my deposit has already been made. It has already been doubled, right? So I'm risk free, guys. So for me, guys, all of these accounts, except I would say these three, are not something that I would choose. I'm talking about myself, because I like to make money. Money doesn't stink, right? No one is, I would say, afraid of making money, or no one is disgusted by the money, right? So money doesn't stink, I always say. So what should I do? I always, guys, think about, okay, if I want to invest in something, I want high yield. This means, guys, that risk needs to be a little bit higher than usual. So in this example, guys, only 3 of these accounts that are shown here on copy trading are actually for me to be invested in. Look, it's okay. 69%, 65%. Uh, I don't care. I mean, look, if we leave it long enough, there is a big probability that this these two guys here will also give 80 or 90 or 100% yield. But for other traders below these guys here, look, we have 43%, 55% drawdown. It's not something that I would like. Or 27 with 41. Maybe, guys, you would like a lower drawdown, right? And you can go with this. But look, guys, the main principle of investment is you invest what you are not afraid of to lose. This is very simple. You don't invest or you don't take credit in order to invest. This is your surplus. Surplus of money is to be invested in, let's say, copy trading service. So surplus, not limit, not something that you are limited with. So the main principle of investment is to make higher return. So make money work for you. You are the employer, money is your employee, right? And money makes money, right? Now, if you are, let's say, a little bit stricter on the budget, then you can choose from whatever other guys you can actually start investing with. For example, here you see drawdown is 13%. It's very small drawdown, but let's be honest, 9.30% is return. Okay, guys, look, if you want, if you have, let's say, a bigger sum of money that you want to invest, and you are not a little bit on the riskier side, so you want less stress for your investment, then you can actually take something like this, okay? And look, the risk factor is small. This one is even smaller. Look, risk factor is 4. So if you want to invest, let's say 100,000, okay, you won't be maybe having a higher yield, 7%, 7, but the risk is very small. Well, draw down around 10% is okay. If I see this 6% return, 31% drawdown, for me, it's a no-no, guys. This is not something that I would like. 6.37, 31. This is not what I would like myself. All right. So I want something that gives me higher yield, much higher than a drawdown. For example, something like this is my account, how I trade, 470% gain, 52% drawdown. Look, so this is what I would look now to invest in. So for me, being, let's say, a guy who likes to take risks, only first 3 of those accounts are something that I would deal with. All right. It's not, this is me again. Other thing, guys, that I want to look at when I choose who I would invest with is actually the leverage, the fees, and also, guys, what are the markets that are to be traded. Usually, guys, with you can find bio here, and you can read. So here you see it's a robot. So this is automated trading, which will give euro, which is named by euro dollar 250. So this is algo trading, and robot only trades euro dollar. And look, it makes small profits. Profit after profit. It's a sort of scalping, obviously, guys. To me, this looks like a sort of scalping. Maybe it's even on some sort of maybe martingale side or whatever, right? But fees are also not big. I would accept up to 30% fees because, guys, in manager business, when because I'm a businessman, right? When someone brings me the business, some client, right? I can give him 30%. So this is like what we call manager fee. So fees up to 30% are acceptable. Okay. This is how I would also think. Because, guys, manager fee usually widely accepted is approximately 30%. All right. So from the fees perspective, from leverage perspective, it's okay. I also like higher leverage, but it's okay. I don't look 1 to 100, 1 to 888, whatever, guys. The higher for me, the better. But it can be also lower. Like it's not low. This is still high leverage. But look, anything below 1 to 100 would not be acceptable to me. So I would like to see leverage 1 to 100 and higher. This is again my own opinion on the investing side. Because guys, look, leverage is not necessarily taking gambling trades. That is called misuse of the leverage. Proper use of the leverage. I had lectures about leverage and I educate a real use of leverage. You can diversify your portfolio, especially guys, if you have multiple instruments. Then leverage helps you to go with multiple instruments and manage them one by one. So, by any means, leverage is not your enemy. This is our friend. And the big problem with leverage was not understanding how to use it properly. The education about leverage. And the leverage is the best thing for me. And I like to use the highest possible because I know how to make profits. And obviously, we can see that from this copy trading service that XM offers, there are also people, robots, whatever, guys, who know how to make profits. Right. So I would choose probably this one, 20% fees. Look, it has a pool of 100,000 of investments, which is still good. Minimal investment is 300. Look, this is, I mean, look, the $300. Okay, this is very, very small investment, minimal. But as I say, it's for me acceptable. I would always allocate a certain uh, deposit right from my surplus, and I don't have problem with 70% drawdown. Because look, guys, I know how robots work. Usually, robots manage this drawdown on averaging out, martingale. Techniques for robots are different than for human traders. Right, so you need to understand this. Techniques which robots use to manage the funds are totally different from what manual traders do. All right, now let's just take a look at different kind of beast. I would say something that has very small risk and very small return. Look, guys, here. For example, we can see this already. You know that this is some sort of robot. It says AI quantum prediction, artificial intelligence. Okay, no problem. 500 leverage fees, only 10%. But look, guys, obviously this is dollar. This is dollar Australian dollar CAD robot. Australian dollar CAD is one of the slowest markets. I think the average range of the Australian dollar CAD is around 40 points per day. So you cannot hope for something huge, but this is something, guys, that I say very small return, but also small risk. So if you are to a sort of trader that cannot bear or accept higher risk margin, then I would say this can be the robot for you, and you can copy this kind of strategy. So you see, guys, the first thing is you need to know who you are. Who are you? Are you a risk taker? Are you afraid of taking big risk? We call them rabbits, right? Or are you a shark, maybe? You want all in? You can choose from anything you wish, guys. More or less. Either, probably how I see things, either you are on the side of taking high risks or you are on the side of taking very small risks. Look, some of those robots are not performing well, and this is also uh, possible. So it's not always that it will go your way. But then again, you leave. This is why you have statistics, and you need to leave your money working for you. You know, guys, the worst thing is, let's say that you say that your maximal drawdown is 30%. And if you cannot accept higher drawdown, this is not strategy for you. Right. So for me, guys, usually how I see robots need space more than we people. So sometimes uh, a robot automatically manages by using higher drawdown because it opens more positions to average down the loss. That's why you will see higher drawdown. But when you trade with a robot, I think that this is something you need to do, guys. This is the only thing which is 100% different than human trading. For example, I try to replicate these kind of things with averaging down, control martingale, but it's limited, guys. It's not something that I can replicate a robot. That's why you see higher drawdowns. It doesn't necessarily mean that it had streak of losses to yield 70% drawdown. It just means that it used some strategy to average down the loss, right? So that's why it opened many positions. Many of positions were in a loss until it managed to close all of them finally in profit, right? So not necessarily, it doesn't necessarily mean that the robot was performing badly, guys. Okay. So this is basically what I wanted to tell you in this session. Finally, you will choose yourself which kind of strategy you would like to copy, right? Also, guys, here, I think I mentioned this before, but it's okay to mention it again. At the top tab here, you see best performance, Crypto Kings, high win ratio, high own funds. Sometimes this kind of tab can also give you security because sometimes, look, own funds mean that a guy trusts his system, method, or a robot. Anyway, guys, to know more about this, you can always try to log in and copy a trace from your XM members area. You have copy trading tab. And for more things, guys, to see how I trade, how I manage my own accounts with real money and educate you how to trade, come and see XM live every single day, guys. I will be there. You can ask any question. See you soon, guys, and trade safe.